Hello traders, welcome to my video on the London Breakout Trading Strategy. This is a very old trading strategy that has been used by many traders for many years now. It's very simple. What we're going to do is mark the high and low of the Asian session and then during the London Open wait for a breakout of those highs and lows. So as you can see here, I've got an indicator on my chart that marks out the Asian session for me. This is a Euro dollar 1 hour chart in the MT4 platform. Okay, and essentially what you do is you mark the high, you mark the low, and then when price has a breakout either direction, you trade in that direction. Now, the thing worth mentioning is a lot of traders think you can just do no other analysis and take the breakout as it is. And of course you can. But how do you know if you want to sell or buy? Okay, what I mean by that is some traders will buy if it breaks out above and sell if it breaks out below, which is fantastic, and you can do that if you like. However, I wouldn't do that. Why wouldn't I do that? Because we need to look at the overall bigger picture and trade in the direction of the trend. Okay, so we don't necessarily want to trade a breakout to the upside if we're in a downtrend, and we don't necessarily want to trade a breakout to the downside if we're in a uptrend. Okay, so what I would do is first identify a trend on your chart. Here we have a clear trend. You can look at your chart and you can see the market is trending down. You can use fancy indicators if you prefer, or basic indicators. If we just put the MACD on the chart there, you can see that the MACD is below the signal line, suggesting a downtrend, and there is momentum in this move. Okay, as you can see from the MACD continuing to go down and back below the signal line there, following on from a pullback. We also have resistance here. It's actually a triple top candlestick pattern. We have a breakout of support there. Okay, the support of the neckline, that is, of the triple top candlestick pattern. I do have a video on that if you want to learn more. For that particular setup, we have a wedge pattern here. Okay, so you do have a breakout there of that wedge pattern, all at the beginning of this trade, this trend, which you don't necessarily need to guess if you're going to buy or sell. You can just use indicators, use basic trend lines, support and resistance, price action analysis to help you determine which direction we're going to trade in. For example, whilst we were in this range, I would not have been looking to buy or sell the breakout of this particular Asian session, and nor this one, although if you did trade the breakout of the high there, it would have been a decent trade. But what I like to do is find an established downtrend, as we do have here, and trade in the direction of the trend. So once we've established this as a downtrend, if you hadn't already entered based on the breakout of the neckline and you're just focused solely on the London breakout trade, as I said, this is the Asian session marked here in grey. So you would just place your sell order, sell stop just outside the support level. You don't need to bother putting a buy trade there. Just to reiterate, we're in a downtrend, so we're going to look to sell. Okay. So price does break out below the low during the London Open, and it's a good trade. A very good trade. I mean, if you were day trading, you might have come up too early on this particular move if you stayed in there over 200 pips. Okay, you'd probably be, if you did panic and exit early here, if that's part of your strategy, fair enough. What I would do is let the trade play out. trend is your friend, and I like to cut losing trade shorts and let winning trades short and let winning trades run. So in this instance, once prices fall into this area, my stop loss, which initially would have probably been here, just above the other side of the breakout, because if it's a fake out and price turns around, we know that, okay, perhaps we were wrong this time. And then move your stop loss down as the price is falling. We can trail it, and stop loss here. We're down here, we can move our stop loss here. We've locked in a lot of profit. You could close some other position and let the rest run. It's just last thing you'd want to do is leave your stop loss where it is and have price turn back around and take you out and let your winning trade turn into a losing one. Okay. The MACD crossing over here and even where we are now could be a signal to start looking to maybe close out the position, along with the support level thus seems to be holding up. See some indecision at the moment. It'd be interesting to see how this plays out. But yeah, either way, you still would have made some nice pips on this particular move. Had you missed that one, next day, again, same principle. You take the high, the low of the Asian session. This was a textbook London breakout because it was during the London Open. This one, not so much. It does occur during the London session. It's just later on in the day. I mean, some traders would delete Asian session breakout pending order after a few hours and just say, okay, it hasn't happened, it's not going to happen. However, you can keep in mind once the New York market opens around just after lunchtime in the London session, then can bring extra volatility to the market and cause more chance of the breakout happening. Although it is nice to get in there early, get it out of the way, and then you can just lock in your trade at break even and go about your day and let the trade play out. Again, we're still in the downtrend, so we know that we're looking to go short on the breakout. Just to emphasize my point, if you were trading the London breakout without any emphasis on the direction of the trend and you put a buy order here, you can see not a good trade, which is why it's important to look at the bigger picture, and you can use other indicators for confirmation. Okay, if we just remove the MACD for now, can put the ADX, you can see the momentum here. With the ADX, basically when the red's above the green, it means that the market is in a downtrend or could be in a downtrend, and when this main line is high, there's momentum in the trend. So yeah, you can use that as an additional filter specifically on this initial breakout here. You can see it was good momentum for a sell trend there. This one not so much. I mean, by the time the breakout did occur, the ADX had crossed back above, so that was confirmation there. However, the momentum wasn't as good, which is normal, but then it did eventually pick up. This one perhaps would be maybe too late in the day to take. It's still with a stop loss. If you were having your stop loss on the other side of the Asian session high, it may have held, but you have to consider, we have some bearish divergence there on the ADX. It's just when there's lower highs that things may be slowing down, and we've already seen quite a big amount of movement in this trade. That being said, in this trend, it could have worked out had we waited patiently. Next day you can see another big breakout. This one is a bit trickier because the price did come up quite a bit. However, if you were looking to put your stop loss above recent resistance here, which still would have been a reasonably tight stop loss of just around 15 to 20 pips, which is nothing really for the 1 hour chart. Time frame, you could have got in on this London breakout of the Asian session low here, again selling in direction of the trend. Okay, by the time we've got down here, you can see the momentum of this move is gone. If you zoom out, the market is consolidated, the support levels holding up here after that big bars occurred as well. You know, you don't want to sell low, so that may be reason enough to avoid that, and then just wait patiently for the next trend to play out and look for entries there. You can also use other currency pairs to find opportunities, and of course you can use any chart time frame you wish for your analysis. The basic is basically trading the breakout of the high or low, which will be the same across any chart time frame, the high low of the Asian session, that is. But your indicators, I find, and price actions tends to be more reliable on the higher chart time frames, which is why I like to trade the 1 hour, 4 hour daily charts. Okay, so that's the basic of the London breakout trading strategy and how I like to trade it. Of course, there's thousands of different ways you can trade it. So, you know, you trade it the way that works best for you. Just make sure you've got sensible money management. As always, thank you for watching. Please like and subscribe for more. Catch you on the next one.